Well, bonds have a lot, of course, to do with mortgages, and there's more bad news about the housing market. Mortgage applications fell last week to their lowest level in 4 months as borrowing costs climbed to a new high for the year. And ZipRealty reports today that listings of homes for sale fell 24% in May compared to a year ago as prices fell for the first time this year. Well, joining us right now in an exclusive interview on Bloomberg is Pat Lashinsky. He's the CEO of ZipRealty, an online real estate brokerage. Pat, good afternoon.
Good afternoon.
So you've got home sale listings falling. That number seems pretty big, is it?
It is, particularly when you look at it on a month-over-month basis. Not only do we have a 24% decline versus last year, we have a 3.8% decline in the number of homes available for sale just versus last month.
So it's not getting better month to month here?
No, the number of homes that are available for sale is actually declining, which actually is a good sign for the market because we're starting to buy down some of the inventory that's out there.
So less supply on the market, correct?
Less supply on the market. So it's actually a good sign because what it means is that we're moving back towards a little bit more of a part of equilibrium in the market instead of being so heavily buyer-oriented.
And you believe that based on the numbers? Because, you know, numbers can be crazy, and, you know, do you really see a significant trend that tells you that story?
We are. We're seeing our buyers and the clients that are working with us are becoming much more active, and we're running into more multiple offer situations again, which was unheard of 6 months ago.
I heard somebody talk to me just about that before we went on, about they were looking at a foreclosure, and they said people were bidding above, you know, the price, and it's interesting.
Yeah, it's actually become a normal thing that we're seeing, and as inventory levels are coming down, and there's still a very strong demand curve right now, we're seeing that there are more people going after these homes.
Really, a strong demand curve? That's a strong statement.
Strong demand curve right now because the affordability is kind of at the highest level that it's been since late in the late 1990s, the
Right.
late 1990s. Driven by the fact that home prices have dropped 40% and the interest rates have been so low, the affordability is at a very high rate.
You mentioned rates because we've been all obviously focusing on rates as rates have been creeping higher, and they all obviously impact those mortgage rates. Is that having any impact? It sounds like no. Because I know historically they're still low, but...
Right now, it has not had an effect. If they start to go up much higher, we are concerned about what that will do. Right now, they're still historically pretty low. But it's really questionable to see what's going to happen in the next couple of weeks.
And that's a good point because I think, you know, we did get the jobs data on Friday. It did come in better than expected, but still a lot of people losing jobs. We still expect to see, if you talk to whether it's Fed Chairman Ben Bernanke or other folks watching the market, that the job market is still going to be tough for some time here. Wouldn't you expect that that's going to certainly have some more pressure in terms of the housing market?
Well, the job market does have an effect, but I think that what most people are missing is the fact that home prices have come down 30 to 40%, interest rates are at an all-time low, and affordability has gone from being at about 16% to 36%. So although unemployment's gone from 6 to 10%, the number of people who are working who can now afford a home has been so much higher than what it was 18 months ago. That's more than making up for unemployment. As long as the interest rates stay low and we've got affordability, it's going to kind of balance off the unemployment.
And as long as they have a job, or they think they're going to have a job. I mean, that's
right.
Still a big if out there.
Confidence is important.
All right, what about foreclosure sales? Because they've definitely been increasing, helping some months to really boost home sales. I'm curious, are they still a growing factor in these home sales numbers?
They are still a growing factor. In the first quarter of this year, we saw about 51% of the business was being done through foreclosures or distressed.
Wow.
So versus in the first quarter of last year, it was about 16 to 17%.
Wow.
So you've seen, and that is going to continue. We have a second wave of foreclosures that are coming down the pike the rest of this year.
Right.
And so that number will continue to be very high throughout the rest of this year.
All right. So that to me says it's going to put pressure again on home prices.
It's going to put pressure on home prices. Home prices are going to be under pressure for the rest of this year. The good thing that's helping, though, is that as interest rates are low and as buyers continue to come into the market and say, this is a good time and I think that there's a value out here, it's kind of equalizing it. One of the things that's been interesting is every month this year until this month, the median home price available for sale in the markets that we cover has actually gone up. This last month, it was flat. So we're actually seeing that for the first time, it's kind of stabilizing, but that's a good sign that the prices aren't fluctuating like they did last year, where we'd see 6 to 8% declines on a month-over-month basis.
Right. In this environment, if you see some stabilization, you'll take that.
Absolutely.
All right. I'm curious if you notice any kind of regional variations in terms of the data that you guys pull up.
Absolutely. It's very, very different. When you look at the Sun Belt and the coast, you're seeing that volumes are growing very, very high. Inventory levels are dropping very fast. For example, in Los Angeles, it's down over 50% versus last year in terms of inventory.
Inventory levels are dropping.
Inventory levels. And home prices are actually slightly up in Los Angeles over the last 2 months, driven by the fact that inventory has dropped by 50%. Compare that to the Northeast or the Midwest, and we're not seeing those same levels.
All right. Everything's always relative. So inventory can drop 50%, but there can still be a ton of inventory out there.
That's
Is that
right.
the case?
Well, we've moved to about just over 8-month inventory level right now, which is still basically a buyer's market.
Okay.
You would say that it's in equilibrium. Somewhere between 4 to 7 months is an equilibrium. Over 7 months, 7 to 8 months is considered to be a buyer's market. Less than 4 months is considered to be a seller's market. We're just about there. 3 months ago, we were at about 10.5.
What about a market like Florida or Nevada or Arizona?
All getting much, much stronger. We're seeing stronger indications. Buyers are getting more active. Homes are moving faster, and inventory levels are coming down very, very quickly. We're seeing those are all markets that you're seeing big increases in the number of homes being sold, and you're seeing inventory levels drop, which are all good signs for those markets. But they're being done at 40 to 50% price declines versus 12 to 15 months ago.
All right, so add it all up, because you sound very enthusiastic rather. So, and I know that there's a lot of folks out there that say it's still pretty ugly out there. You sound enthusiastic. Are you?
I think we're getting to that point of stabilization. And when you look at the data, it's starting to show that as inventory levels are coming down, we're getting to a place where the prices are equalizing. That we'll take stabilization right now. After what we've been through in the last 18 months, stabilization is the first sign that we're moving to a good spot. And I feel like we're getting very close to that.
All right, so again, maybe bottoming out but not getting better.
But I think that's pretty fair.
All right, we'll leave it there. Pat, thank you so much.
Thank you.
Pat Lashinsky, CEO of ZipRealty.